What is a misconception that you hear from people most of the time?
Oh, wow. Get this a lot. I heard about reverse mortgages when I first got in the business in 1998. The biggest misconception is that the reverse mortgage, you don't own the home anymore. That is a blatant lie. It is not true. You do still own your home. You're still on the deed. With a reverse mortgage, it's like a regular forward mortgage. There's just a lien on the property that says this is a loan that has to be paid back. It's just when it's paid back is different. So you still own the home. If you want to sell it, you can pay off the reverse mortgage and you keep the difference just like you would on a regular home.
Okay, I'm glad we got that out.
Out
there. Are you seeing more people today in today's economy and the way that everything is, more people using reverse mortgage?
It's pretty consistent. We have a lot of phone calls, people asking about, wanting information because they keep hearing about them more and more. The thing that we're seeing, and you and I talked about this earlier, is we're seeing a lot of people, especially over the past few years with COVID and the increase in home values, we're seeing a lot of people that are equity rich but might be cash poor. The values of their home have gone up substantially. And I know working in the mortgage industry, generally they say your home value goes up 3 to 5% roughly. That's right.
Okay.
And that's been pretty standard. Sometimes it's been 1 year, might be 1%. And then 2021, 22, we saw, I think 1 year was 19%. Which is crazy, but it happened. So we're seeing a lot of home buyers that especially in in the reverse mortgage world, they might have their home paid off and their house is free and clear and it's worth a lot more than it used to be, but they're running into inflationary pressures like everyone else is. Things are getting more expensive. Healthcare is a big deal. It's a big deal with a lot of people right now. So those expenses are hitting a lot of people, and even though a lot of our clients have saved and they did everything right. They saved up like they were supposed to. They have that monthly income coming in, whether it be Social Security, pension funds, retirement, 401k, IRAs, anything like that. They've planned and they did everything they were supposed to do. But life as it is right now has gotten more expensive. So sometimes they run into where there might be a cash crunch. Or they might have investments and their financial advisor has sent them to us because...
Wait a minute, a financial advisor sent them?
Yes, we get that quite a bit. What they run into is they have investments, and those investments are paying for their lifestyle each month, but the market might take a turn.
Okay.
So rather than having to dig more into those investments, their advisor can either turn off some of those, or they can use the reverse mortgage to access that cash through a HECM line of credit. So they could take out a reverse mortgage and get that line of credit,
and still have
and they only use that money when they need it.
Okay.
So you get a monthly statement each month if you have a reverse mortgage, lets you know how much you have available, and then you can draw however much you would like. And that money that you draw out is tax-free too. So there are no tax consequences on that, which that's another reason that their advisors send them to us so they can access that. Now,
makes sense.
Sometimes, and I know where I was employed previously, financial advisors would send their clients to banks or credit unions to get a line of credit. A home equity line of credit, a HELOC, which is a great tool to use. The only difference is that the home equity line of credit does have a monthly payment requirement. Whether that's a minimum required payment of an interest only or the principal and interest, which if you're doing that, that's kind of defeats the purpose because you're looking at that monthly cash flow. And if you're having to take on another payment, that's another thing you definitely want to consider. With a reverse mortgage, you don't have that. You don't have that monthly payment. So you just access the cash if you need it for that month, but yet it doesn't hit you having to pay higher payments later down the road.
Okay. Wow.